Welcome to the Explainer. You know, if you've been keeping an eye on your gold and silver, you've probably noticed some interesting moves lately. Well, today, we're going to dig into what's really going on behind the scenes and causing those prices to shift. Okay, let's just jump right in. If you're holding on to precious metals, you might have seen things get a little turbulent, and you're probably asking, what in the world is causing this? Well, it turns out it's a fascinating mix of big-picture global politics and some really important economic signals.
You know, the first real clue that something was up came on Thursday, January 15th. That's when both gold and silver futures took a pretty noticeable dip. Now, this wasn't just some random hiccup. It was a big flashing sign that the mood among investors was changing, and it was pointing to much larger forces at play.
To really get to the bottom of this, we have to start by looking at the world's political stage. It's kind of like a big puzzle, and a few key statements from world leaders started to ripple through the financial markets, calming a lot of frayed nerves and changing how people were investing their money.
This whole thing really boils down to a simple idea called risk aversion. Just think of gold as a financial storm shelter. When the forecast looks stormy, with global conflict or instability on the horizon, investors rush to gold for safety. And of course, all that demand drives the price right up.
So that brings us to the big question, right? What happens when those storm clouds start to clear up? Well, when the world feels a little less risky, that urgent need for a financial safe haven starts to fade. And it turns out the answer to what part of those clouds came directly from some headlines out of the White House. Now, a statement like this, it has an almost immediate effect on the markets. It was seen as a clear signal that tensions with Iran were de-escalating. And with the fear of conflict dialed back, that urgent, almost frantic demand for safe haven assets like gold began to cool right off. And it wasn't just what was happening overseas. Back here at home, another potential source of anxiety for the markets was also put to rest. There had been some chatter about the leadership at the U.S. Central Bank, the Federal Reserve. And that kind of uncertainty always makes investors pretty jumpy.
And this is just a perfect example of how a single, straightforward sentence can pour calm water on the markets. Because the Fed controls interest rates, its stability is absolutely crucial for economic confidence. By confirming no changes were coming, one of the big what-ifs was taken right off the table.
But believe it or not, this wasn't just about politics. At the very same time, we were getting some major economic signals from halfway around the world, from China to be exact. And what was happening there was also playing a huge role in shaping how investors felt.
See, over in China, their central bank started sending out signals that it was ready to step in and give its economy a boost. In the finance world, they call this an accommodative policy. But really, it just means they're making it cheaper and easier for businesses to borrow money and grow. It's like greasing the wheels of the economy.
So they were talking about things like cutting interest rates and making other technical moves, but the goal was simple: inject more energy into their economy. And when China takes steps to keep its own economy stable, it tends to have a calming effect on the entire world, which once again reduces that need for safe haven assets. Now, before we get into how the pros are actually reading these market charts, if you're finding this explainer helpful, please take a quick moment to like, share, and subscribe. It really does help us create more of these for you. So with all this news swirling around, you might wonder, how do the professional traders make any sense of it? Well, they don't just read the headlines. They go to the charts, and they focus on what they call key technical levels.
The easiest way to think about these price points is like their battle lines. On one side, you have the bulls, who think prices are going up. On the other side are the bears, who think prices are headed down. And when the price crosses one of these lines, it's a big signal as to who's winning that battle.
All right, so let's look at the numbers the pros are watching. For gold, the big battle lines are $4,750 on the high end for the bulls and $4,400 on the low end for the bears. And for silver, they're keeping a close eye on the $180 levels to see which way the momentum is going to shift.
Okay, let's step back for a second and pull all these threads together. When you look at all this recent activity, what's the big picture? What does all this volatility in precious metals really mean for you?
What we've really been watching is a classic cause and effect chain reaction. First, we had calming headlines on the political front that lowered the sense of risk in the world. That, in turn, meant less urgent demand for the safety of gold, which led directly to prices pulling back a bit. It's really that simple. And if there's one thing to take away from all this, it's that assets like gold and silver don't live on their own little island. Their value on any given day is really a direct reflection of how safe and secure we all feel about the world. You could almost say the calmer the world feels, the less of a shine gold has for investors. So it leaves us with a pretty big question, doesn't it? In a world where headlines are changing by the minute, where do we find true financial safety?
It's definitely something worth thinking about. Thanks so much for joining us for this explainer.